since not a lot of people are, you get the benefit of being, only the couple fish in the pond. Sellers are desperate, and they're willing to take a lot of prices that they would not be willing to take if there was a lot more buyers, because they have the mentality, if they get a good offer from a qualified buyer, they don't know when their next offer is coming. It's bad for the sellers, but very, very good for the buyers. So it gives you a lot of weight, out there in the market. The selection. Right now there's so many houses to pick from. When the market is up and people are buying, the inventory's on and off. So you're obviously dealing with whatever is going to be available to you. Right now you have a massive selection of houses that are out there. Between the new inventory that's coming on and the inventory that's been sitting for the periods of time. Okay? The rates right now are unbelievable. The first-time buyers now have gone under 5%. I think it's at yesterday, it was 4.75 for first-time home buyers, which is amazing. So if you don't own a house now, you should own a house. Okay? And the demand for affordable rentals. When less people are buying, that means more people are renting. And at the same token, these poor people who are losing their houses, they still need a place to live. Good rentals are hard to find, especially affordable rentals in places you actually want to live are very hard to find. A good rental is usually on and off the market in 2 weeks, a month maximum, if you have it priced appropriately. So right now, we have a lot of houses that are sitting empty with nobody taking care of them, and a lot of people who are going to be looking for a place to live, and there's no place for them to really find that they can afford. So if you can take these empty houses, get a great price on it and fix it up, there's a lot of good quality, tenants out there that are out there for reasons beyond their control or because they are too scared to buy right now. So if you can get beyond that, then you're going to have the advantage of having a lot of these tenants out there that are going to be good tenants for it. Now, some options for safer investments. Any investment does run a certain amount of risk, but there's a couple types of real estate investment that you can feel relatively safe that you're going to come out of it okay. Now, these couple things are your first house. If you don't own a house, you should buy a house because no matter how bad things get, you will always have a place to live. If you own your house, then that's one very big worry that will be off of your mind. Okay. Buy your retirement house now. If you know where you want to retire to, and you buy it now, you get the advantage of the prices now. And if you can rent it out, it could very well be paid for by the time you retire. And then everything that you get from selling your property at that point will be purely in your pocket. Or you could then in turn rent out your present property. So buying your retirement house now is a really good thing to think about if you know where you think you'd like to move to at that point. If you have kids that are getting to college age and they know where they want to go to college, buy a house around the college. College housing is always going to be easy to rent out because kids are always going to want to live in it. Now you're going to have a property and you're not going to have to worry about your kid having a place to live at college. And also, you have the potential, if it's out of state, to be able to get it so it looks like it's in state because now your child will be living in that state if you own the house, if you put them on the actual contract. So that could get you some really good advantages too, as far as buying the college houses. Okay. And the last one, the types of transactions that you can encounter. There's 3 types of sellers out there. Now the one is what everybody's predominantly used to, which is a seller is selling a house to a buyer. It's pretty self-explanatory. You just negotiate with the seller. If you're both okay with the terms, then the sale goes through as long as both parties remain happy through the whole thing. Now the other type that's out there now is bank-owned houses. Now bank-owned houses, they are starting to change a little bit. They used to say, it's as is, they're not going to do anything, you really couldn't expect them to do anything. Now you still need to go into that with that mindset because you can't go into it thinking that they're going to fix this, this, and this. But sometimes they are fixing things now during the home inspection period, which is something very new that I've just started seeing. but then you're pretty much negotiating with the bank who has no knowledge of the house. So you are taking on a little bit of additional risk when you're doing that. You need to make sure you're very thorough with your inspections and that you are well aware of everything that's going on in that house. And then the last kind, which is the most complicated, is the short sales. Now, what a short sale is when a seller owes more on the property than it can possibly sell for in this market. So what the difference with the short sale versus the bank owned is even though the seller still technically owns it, the bank as a third party needs to approve the transaction. It can take a very long time because the banks are going to go through a lot of different steps to make sure that the seller really can't afford the mortgage anymore. They don't want to take a loss on the money. So they're going to have to prove a hardship that the seller, is going to get foreclosed on. And then they also want to make sure that they're getting a fair market value. So they're going to have, their own agents come out and do appraisals on the property and all that kinds of stuff. And the house is also going to be in as-is condition because the bank is usually not going to fix anything. And the sellers at that point usually don't have any money to fix anything either. There can be a lot of surprises with the short sales. Towards the end of the transaction, when they start doing things like the title search, if there ends up being a second lien on the house, something like that, then a lot of times it does get turned back onto the buyer, where you have to make the decision about whether you want to pay off that loan or not. Because if you don't pay off that loan, then the house can go into bankruptcy, so that way they can take their money. So that is what a short sale is, and those are the three types of transactions that you could possibly encounter. And that is pretty much what I have. And we have Drew Murray here, who is our real estate attorney. So he is going to go over the process of buying a house from a legal standpoint.